morning, guys. The time is around 8:37. Let's look into Monday and Tuesday Bitcoin trade analysis. So first, let's look into higher time frames, and it would be an intraday basis. You can see I have mentioned to you previously about this swing momentum where the market swept this previous 2 days liquidity over here. You can see this is the previous 2 days liquidity. The market swept rejected price from 9 moving average and closed above this 200 moving average. This signifies clearly bullishness price. So after this candle, you could have taken position, and I have explained to you this momentum before this candlestick formation itself. If you want, go watch my previous videos. Even this upward momentum without it being formed, I have predicted that the market would come and sweep this liquidity over here. This is our first target. This is our buy side liquidity. You can see the market swept another buy side liquidity over here, and I told you that's the third target would be this. And you can see how the market here swept this liquidity over here and closing within this range. So let's take this liquidity out. Let's take this liquidity out. You can see the market on the initial day, guys. Here, if you consider this momentum day, where the market swept and closed within this candle's range, but not within this previous candle's range. You can see this was the liquidity over here. So this was the target after the market rejected price from these levels and closed above within this range. So the next target, what you could have looked for is this candle over here. You can see previously the market swept this low over here and closed within this range. So the next target would have been this and this. And you can see the market clearly broke these levels, but rejected price from these levels and closed within this range. And the next day, you can see there was an high wave candle. So what you could have targeted is this liquidity over here. This is an insider candle, or you can consider a doji candle. And you can see on the next day what happened on Sunday is that the market swept this high and closed within this range over here, or closed below these levels. So for the next day, what you could have targeted is this low over here. So you can see the market here swept this low and closed within this range. So for the next day, what you could have targeted is this level over here. So you can see the market swept this liquidity below, guys. And market closing within this previous candles range is what is important. And you can see the market here swept this previous day's liquidities above here and closed within this range, or you can consider closing below this level. So for the next day, what you could have targeted is this low. You can see the same day the market opened here, swept this liquidity and headed higher and closed within this range over here. So you could have targeted this level, and you can see this is an insider candle. And you can see on the next day also the market formed an insider candle. So what we can look for is the market sweeping this liquidity over here. So either the market might sweep this liquidity here, or the market might sweep this liquidity below here. So either the market might sweep towards the upside, or either the market might sweep towards the downside. So let's look into a smaller time frame analysis and see here how you could have expected the market to come here. So the market swept here. So either the market might sweep this liquidity here. So this is buy side liquidity, guys. So this is another buy side liquidity. So this is another buy side liquidity. So there is a lot of liquidity zones over here. And this is the sell side liquidity. So either we expect the market to either sweep the sell side liquidity or the buy side liquidity over here. And you can see here the market swept this low, and even it swept this sell side liquidity, mitigated this fair value gap over here. You can see this fair value gap over here where the market has not been mitigated. So the market mitigated and closed within this range. The momentum aggressive towards the downside, aggressive momentum towards the upside, and market continuing further towards the upside. So either what you can expect is that the market might continue further bullish and continue further bullish, sweep this liquidity above here and comes within this range, or you can expect a liquidity run as well. So you should see whether the momentum here breaks aggressively towards the upside or there is liquidity sweep. So in my previous videos, if you go, I have explained you about how the momentum happens here, either in buy side liquidity or here the sell side liquidity. So let's analyze on Monday and Tuesday time frame analysis, guys. So I have explained to you this momentum over here, and you can see how the market aggressively showed some kind of momentum towards the downside, failed to sweep this liquidity below, guys. So you can see the market here, there was some sell side liquidity. What we could have expected is the market breaking this sell side liquidity. So definitely the market swept it, guys. So you can see this is another sell side liquidity where the market swept this sell side liquidity, and suddenly the market, you can see there is no close of the candle below. This is only the sweep, guys, and in a 5-minute time frame I'm explaining to you. So in case if you explain, if you may explain, you can see this was just a sweep of this liquidity, and suddenly the market closing within this range, aggressive momentum towards the downside and aggressive momentum towards the upside. clearly indicating the market after sweeping liquidity. You should have expected the market to further go bullish. So this is in a 5 minute time frame. You can see the market clearly formed a chalk over here. So either the market broke this structure high over here, and you can consider it to be a market structure shift, or even this structure high. So this is a clear market structure shift, guys. So or else you can consider it to be a chalk formation. And you can see what we could have expected the market here is that after the market sweeping this liquidity, you could have expected the market to reach to this fair value gap from the optimum trade entry zone, or the breaker block level, or anywhere along these levels, and continue further. But you can see there is no retracement only, guys. You can see how the momentum here was heading higher with no proper retracement itself. And you can see the market here kind of broke structure towards the downside. You can see a clear chalk formation over here. Consider this to be a clear chalk formation. But what we need to see is to consider this swing momentum, guys. In case if you expect some kind of reversal over here, either the market should have retraced to 0.38 level. If you see this momentum towards the upside, the market didn't even retrace to 0.38 level. Instead, the market retraced to 0.38 level, clearly signifying bullishness. Or if you consider in a higher time frame, guys, you can see the market neither crossed this 21 moving average, rejected price, and closed within this range over here. So this was just an breaker block, guys. You can see the market here. This is the last up candle. So the market came, mitigated this breaker block level, and further continued towards the upside. So aggressive break, retest, and continue further, guys. So I hope you're understanding what I'm saying. This is just a line, guys. Breaker block is the whole zone over here. You can see the market exactly came, retested this breaker block level over here, and continued further bullish. So in case the market would have broken these levels towards the downside, is where we could have expected the market to continue. So it's whenever you find a choke, guys, like this momentum, after the market sweeping liquidity over here or anywhere, you should wait for a retracement to continue further selling towards the downside, or you could have look for a higher time frames whether the market is sweeping liquidity and changing the market sentiment from being bullish to bearish. So you can see, you can consider this whole momentum base from the market sweeping this sell side liquidity to all the way here, where the market even swept this liquidity over here. You can see this is another buy side liquidity which has already been swept. So swept, and the market, guys, here after sweeping this liquidity over here, the market, this was previous swings over here. So what we need to see here is the market formed an higher high here. So we need to look for market structure shift. So the market broke this level impulsively, retraced, broke. Again, the market retraced, broke these levels, made an higher high, and after that the market immediately formed a chalk over here. You can see this momentum over here. In case if the market sentiment would have been the market after sweeping this high over here could have retraced somewhere to this 921 moving average and continued further bullish, guys. But this momentum though could have never been happened. You can see a clear chalk formation over here, breaking this swing low, and even this swing low as well, guys. The last support over here, even this low also the market clearly formed, and it clearly signifies a market structure shift. And what you could have plotted is that this is the last up momentum, as what you could have considered is the fib of this candle over here. So if you consider this fib over here, and once the midline has been broken towards the downside aggressively, and or the market breaking the neckline of the previous support, guys, this is where exactly you could have taken long position, short position. Once this neckline has been broken, keeping your stop loss just above the candle itself, this was one opportunity where you could have taken short position and targeting it all the sell side liquidity. But better option was to wait for retracement. As you can see, this aggressive momentum towards the downside has left some fair value gap over here. So the market came, mitigated this fair value gap. You can see exactly at these levels where the market came, mitigated this fair value gaps. And if you consider this whole swing momentum over here, the common point between this to the common point between this. So what you could have plotted is a 550 levels over here. So this is the 550 level where the market came and retested this 550 level, and this is in confluence with this fair value gap over here. As you can see, the fair value gap and 550 levels. So and you can see the price rejecting from this fair value gap and closing below this 21 moving average, guys, the red color line over here, clearly signifying bearishness. And in case you could have expected the market here to take support here and continue further now, guys. So there might be an option that, okay, if this whole swing is one momentum over here, so if you consider this, the market taking support from 550 levels, and the market might continue further bullish. So what you could have either expected is that the market broke these levels came to 50 levels and continue further bullish like this. Instead, the market rejected here and continued further. So what you could have expected is either the market breaking these levels towards the upside. So at this point, guys, what we need to either plot is the 50 levels of this momentum. So if you consider the high to low of this candle, once if this 0.5 levels has been broken towards the downside is where you could have easily entered. But what we need to see is liquidity, guys. How the market is behaving. The market sweeping the liquidity over here. So the market sweeping the liquidity, rejecting price from these levels and continuing further selling towards the downside. Always we should trade based upon liquidity sweeps. So in case if you consider the fib extension levels, right, the common point between this to the common point between this to the common point between this, so you could have targeted all the way to this 100% move over here. But the market didn't reach all the way to this 100%, guys. So this is where you could have targeted and keeping your stop loss just above this candle. You can see there was an aggressive buying momentum where the market mitigated this fair value gaps over here and again rejected price from these levels and continued further selling towards the downside. So what you could have done is to take short position here, is keeping your stop loss just above that candle wick and targeting it all the way to 100% level. But what we need to look here is that even though the market has swept this liquidity and showed some kind of aggressive momentum, what we need to look on the contrast is that the market previously swept this liquidity below the sell side liquidity and even clearly changed the market sentiment, broke these levels also. You can see when the market broke the swing also, indicating that the buyers are aggressive compared to the sellers, guys. So what we need to consider is that either you could have marked the 550 level over here, or what you could have marked is that if you consider this swing momentum over here, the swing momentum over here, so in a 15 minutes time frame. So if you consider the common point between this to the common point between this, what you could have plotted is the optimum trade entry zone, guys. So this optimum trade entry zone is where you could have marked and expected the market to either take support from this optimum trade entry, guys. Usually the market tries to take support from 550 levels, and you can see there was aggressive momentum, took support from 550 levels, again retraced back to this optimum, this fair value gap and the 550 levels, and reached all the way to this optimum trade entry zone, guys. So what you could have done is to trial your stop losses, guys. In case the market see it didn't reach all the way to this zone over here, you could have either expected there is a fair value gap over here. So you can see there is definitely a fair value gap between this level. So you could have either expected the market to come and mitigate this fair value gap, but you can see the market didn't reach, guys, and instead the market took support, failed to make a lower low here. The market reached this, the market went high, mitigated this fair value gap, and again came all the way towards the downside. Here the market failed to make a lower low. You can see this, guys. So let me explain to you in a 5-minute time frame. You can see the market here aggressively shared, came, mitigated this fair value gaps, or if you consider this swing momentum over here, if you consider the high of this candle to the low of this candle, you can see the market retraced to 0.38 level over here. So the market, after retracing to 0.38 level and rejecting price, mitigating this fair value gap, and again the market aggressively sold towards the downside. Either you could have tried your stop loss to this level, guys, once after the market mitigating this fair value gap and continuing further selling towards the downside, and keeping your stop loss at trial SL, you could have done it here, guys. So I'm teaching price action along with risk management over here, guys, how you could have taken. So this is where you could have trialed your stop losses after the market, after taking this position. This is where you could have tried, and you could have expected the market to after this retracement, expect the market to break and continue further downwards. But all this 100% more the fair value gap over here, you can see the market here failed to make a lower low. Instead, this trial SLs clearly broke structure towards the upside, and here the market instead took our SL and found a chop over here. So you can see a clear market structure shift, and there was an aggressive momentum with fair value gaps towards fair value gap. So what you could have done is either you could have plotted the 550 levels over here, the common point between this to the common point between this. So you can see the market taking support from 550 levels over here. This is the 550 levels. So you could have either expected the market to come and mitigate this fair value gap. Definitely the market has mitigated, as you can see. If you consider this 3 candle structure, the market mitigated, rejected price and continued further. So in case the market would have further continued and mitigated this zone and continued further bullish noise, what you could have done is to plot the retracement levels of this candle over here. So once if this candle which broke and closed above this level, the 0.5 levels over here, you can see this, guys. This is the 0.5 level where the market here broke this structure with aggressive momentum. You can see a solid with no wicks, a solid Marabuza candle, guys, which broke the 9 as well as 21 moving average. And in case for better confluence, if you try to use the anchor gap level of this swing low, You can see the market took support and broke the structure towards the upside. So either you could have taken your position here, guys, and what you could have targeted is towards the upside, keeping your stop loss just below this candle. I hope you're understanding what I'm saying. So for target levels, if you try to plot the common point within this, do the common point within this, do the common point within this. So what you could have targeted is you could have either targeted it all the way to 1.68 level, or the here you can see the internal liquidity zone over here. So you can consider this to be a buy side liquidity. So you could either targeted the buy side liquidity over here, or you could have just hold it on to your position and target the exactly on that day, guys. The market reached the high over here. So this 2.6 level is where you could have targeted, or see exactly the market came over here, or the order block level also. As you can see, this is the last up candle which got structured towards the downside. So either you could have considered this order block level over here where the market came. This is the last up candle. So you can see the market came all the way to this 5-minute order block and mitigated these levels and continued further. So you could have just tried your stop loss all the way to this level, guys. And you can see the retracement here where price taking support from this 200 moving average over here, and the market here mitigating this fair value gap over here. You can see the market broke aggressively towards the upside, mitigated this fair value gap. So if you try to plot this fair value gap, the market came exactly to the mid of this fair value gap. Or if you consider this swing momentum over here, the common point in this to the common point in this is the 50 levels as well. So retraced here, and you can see this kind of aggressive this kind of pullback, guys. When compared to this momentum, the pullback is very with the fair value gaps, the market showing no imbalance or anything of that sort, clearly signifying that this is a proper retracement, and you could have targeted it towards the upside. So this is how you could have targeted it here. So this was another trade opportunity where you could have taken, but I am not asking you to take this trade, guys. This trade was definitely you could have taken, but what we could have waited is for a retracement, guys. But the market here didn't even retrace here. So clearly the market broke this structure high over here. You can see a clear breakout structure. And the market showed a very small retracement. Guys. Either the market could have retraced all the way to this levels over here, but you can see the market broke a retest over here. So what you could have considered in case if you consider this to be a retracement, and this is the last up candle. So this is a clear order block level over here. So if you consider this momentum over here, or if you consider this candle over here, guys, the market didn't retrace to 0.5 levels also of this last up candle. Or if you consider this candle, this is the last up candle. So the market exactly reached the mid of this candle and continued further bullish towards the upside. So this though is a very it's very risky, guys. With I don't know whether either you could have expected the market to come and mitigate this level. So I'm not sure whether you could have taken this trade. So definitely I didn't expect this kind of momentum. What I expected is the market would sweep this liquidity over here and continue further selling. But you can see the market aggressively showing some kind of bullish momentum. You can see market mitigated these levels. And if you consider this whole swing over here, guys, so if you look into a higher time frame analysis, so after this fair value gap mitigated, there was another fair value gap over here and this fair value gap over here. So the market came and mitigated this fair value gap, rejected price from these levels. So you can see here there is a clear market structure shift over here, sweeping this liquidity and aggressively closing below these levels. So this is a clear chalk formation over here, or you can consider this momentum as well. Clearly the market breaking this structure towards the downside, a clear chalk formation. So what you could have done is to consider the high of this candle to all the way to this low of this candle, where the price mitigated this fair value gap over here. You can see this fair value gap as well as price rejecting from 0.38 level over here. This is the 0.38 level, and again the market you can see here mitigating this fair value gap over here and continued further selling towards the downside. So either you could have taken position over here, or you could have taken position over here, keeping a stop loss just above that candle itself. So what you could have is you could have waited for another break of structure. So the market clearly broke structure. So if you consider this swing momentum over here, the high of this candle to all the way to the low of this candle, you can have marked the optimum trade entry zone over here, or the fair value gap, which is in confluence with optimum trade entry. So the market here rejected over here, and with this candle is where you could have taken a short position over here. So in case if you take your position here, guys, the high of this candle to the low of this candle to the high of this candle, so you could have targeted the 100% move over here, or in case if you could have taken position over here, the high of this candle to the low of this candle to the high of this candle. You can see this is the 100% no. Definitely here there was some kind of momentum towards the downside, but the target levels though was quite not what we had expected, guys. So you can see either you could have entered your position here, but here immediately the aggressive momentum towards the downside where the market broke structure here, clear break of structure and aggressive pullback, guys, where the market here swept this liquidity over here. So you could have targeted this liquidity zone. Yes, this is the sell side liquidity where you could have targeted over here. So you could have either entered short position here, keeping your stop loss just above that candle and targeting the sell side liquidity over here. This is how you could have taken, guys. I hope you're understanding what I am saying. So either you could have expected the market to continue further selling, but you can see the market swept this liquidity, aggressive selling towards the downside, and further the market aggressively showing some kind of buying momentum. Whenever you can see the market sweeping this liquidity and showing some kind of buy bullish momentum, what you could have plotted is that if you consider this retracement level over here, so retracement levels towards the downside. So if you consider the high to low of these candles, once if this 0.5 levels has been broken towards the downside, towards the upside, you can see again the market retraced this 0.5 levels over here. So either you could have taken a position here targeting this kind of buy side liquidity, or you could have targeted this fair value gaps over here, or keeping your stop loss just below this candle itself and targeting towards the upside. But let's wait for a confirmation, guys. So either this was an aggressive entry. So if you consider the common point of this, to the common point of this here, the price action is not as evident as possible, guys. But the market came mitigated this fair value gaps over here. So this 0.5 levels of this retracement along with this fair value gaps over here, the market here mitigating this fair value gaps and continuing further bullish. So the market here swept this liquidity above here. You can see this is another buy side liquidity where the market failed to make an high high. After this kind of momentum, guys, what you can see, there is no imbalance and there is no clear directional basis bias, guys, of the market where the market is not like showing a clear momentum. So it's better. I'm not sure about the price action here, guys. Because of the news, I think there is some CPI inflation about to come. So that's why the market is like consolidating. And you can see this kind of rejection. And here the market swept this liquidity and broke towards the downside. Very aggressive momentum, guys. So you can see a clear chalk formation over here. And if you consider this high of this candle to the low of this candle, you can see the market didn't show any retracement. So what you can see is again the market here broke this structure also. So it's a clear break off structure. So if you consider this swing momentum over here, so if you consider the high of this candle where the market rejected from this 200 moving average, so high of this candle to the low of this candle, you can see the market retraced to 50 levels, or you can consider the favorite retracement. So either you have taken after this kind of bearish candle, taken short position here, keeping your stop loss just above that candle itself. And for target levels, what you could have done is to plot the Fib extension levels, the common point written this to the common point written this to the common point written this, and targeting all the way to 1.68 level. I think here you could have taken one beautiful trade setup. So this was one trade where you could have taken this. I hope you understand. And there was a fair value gap here also of the sell side liquidity over here. So either you could have targeted the sell side liquidity or the fair value gaps or the 1.68 level. I hope you're understanding this. So this is about my Bitcoin trade analysis. Definitely here the price action is not as evident as either you could have taken this kind here you could have definitely taken here. So you can see the market broke these levels, mitigated this fair value gaps and rejected, and with this kind of momentum towards the upside where the market there was multiple short entries I can definitely teach you guys, but I don't want to I want you to be a positional trader, guys, more rather than be a scalper. Because once if you learn positional trading, only then you can become a very good scalper, guys. So scalpers though it's like a gambling, guys, I guess. So only with a short period of time frames, whenever you sign, you can find some kind of momentum. Only like position towards that kind of momentum and make a quick profit. I think definitely that won't work out for a long period of time is what I think, guys. You can see this candle over here which broke these levels over here. So what you could have considered is the count point in this to the count point in this market retracing to 0.38 level. So either you could have taken the position over here, or in case if you try to plot the Fib extension levels here, the count point in this to the common point in this. So you can see you could have targeted there are multiple, guys. If I teach you like this, there are multiple trade opportunities where you could have taken, but You can see even this retracement levels over here where the market broke even 0.5 levels over here. So taking your long position here, keeping your stop loss just below this fair value gap or this solid candle over here, there was another good opportunity for you to take trade. Even in this kind of positions also, you could have even captured this momentum based upon price action, guys. But definitely there is a lot of us. See, I can teach you here the market broke this structure also, and here the market has left some fair value gap over here. So the market here mitigated this fair value gap over here. You can see mitigated this fair value gap. So this was one fair value gap where the market came mitigated and continued further bullish. So you could have targeted another buy side liquidity over here, or you could have targeted this liquidity over here as well. So there's a lot of trade opportunities, guys, where you could have taken keeping your stop loss below this target level itself, and you could have targeted it all the way towards it. So another long position here, you could have captured this momentum. So these are positional trading only, guys, but definitely I would be teaching you even that aspect also. In case if you want me to teach, I can definitely teach you even that with scalping methods also, where you could have clearly captured a very good momentum with minimum risk to reward ratio. And what I'm teaching is like a one candle of stop loss, guys. So I hope you're understanding, guys. In case if you find my video, please like, share, and comment. Share with your friends and family, guys, and keep supporting my channel. In case if you want to keep in touch with me, Instagram is a way to go, and can definitely message me over there, guys. I would be glad to keep in touch with you. And in case if you want any help from my side, definitely I would be helping you out, guys. So I want all the trading community to come over and be a better traders, guys. I think being very disciplined in trading is most crucial. I think once if you start being disciplined, only then you can see a significant progress in your trading, guys. So always stick on to your plans and stay disciplined, guys. Thank you.